Welcome to Real Estate in Real Time. I'm Woody Zimmerman here with Mark Skabowski of Remax Lakes. Welcome to the show.
Morning. How are you?
Good morning. Doing fine. Weather-wise, it just feels so good out.
Hallelujah.
I know.
Finally starting to get one. Last week was crazy.
I know. And it's starting to feel consistent that it's going to stay warm.
Well, it's May.
Yeah.
So we think, I mean, the spinners are starting to drop. We always watch around our house, there's a lot of maple trees.
Oh, yeah.
The spinners, helicopters, whatever you want to call them.
Yeah.
They're all over the place, which now means clean the gutter time is coming, but they're still dropping. Mm-hmm. So that means that spring cleanup, Mother's Day.
Yeah, Mother's Day.
It's Mother's Day weekend.
It's Mother's Day weekend.
So I've got my task set out for me tomorrow.
Yeah.
The wife is already plotting out things that I need to do.
Yep.
Yeah.
Of course, I know.
Yeah,
right.
She's not my mother.
Yeah, right. I know. Come on.
Mother, she's not my mother.
Mother of your children.
That's true. Yeah. Mother of my children. And I love yard work so much.
Oh, yeah. And actually, I do. Actually, I enjoy it. I definitely enjoy it. But not when I have a full week. But
not when I have a lot of things I'd rather be doing.
Right.
But, you know, I guess that one day a year.
Right.
Well, I guess maybe there's two. Mother's Day and her birthday. Yeah. That I will force myself to take care. Do my honey-do list.
Yes, right.
Do my honey-do list. It's necessary anyways. But
of course.
One of the joys of home ownership, right? Taking care of the house.
Yeah, of course.
That's one of the things that comes along. If I didn't want to do it, I guess I could always rent.
Yeah.
Right? That's one of the benefits of renting. You don't have to take care of stuff. Right? Your landlord takes care of that in general.
In general, right.
Well, so I thought we'd talk today a little bit about uncertainty in the stock market and how it really impacts housing.
Yeah. Okay.
So, you know, when people's 401ks are lower, when, you know, volatility is what we're really seeing. I mean, we're seeing spikes, ups, downs, all arounds. You know, if you're checking your 401k balance, your IRA, your retirement balances, every day you're going to drive yourself crazy.
Yeah. Be like me. Don't
look.
Yeah.
Don't look. It will drive. If you're one of those folks that stresses and strains about it, and there are a lot of people that are, there's no sense in looking at it.
No.
So, you know, how is it impacting the housing market? People are less likely to go and invest in a second home if they feel less comfortable about their financial position.
Okay.
Common sense, right?
Yeah, right.
If we're wondering, hey, how are things going? Trying to get ready for retirement, but I don't want to take these assets and buy an asset, you know, that maybe will increase or decrease in value as far as stock market goes. Mm-hmm. But I guess trying to allay some of those fears, the housing market in general is a lot less volatile than what the stock market is. Why is that? It's because it's a longer term investment. So over time, housing values generally increase. And do I sound like, you know, I'm backing off from I'm waffling on it. The fact is, housing values, with the exception of very few times in our history, have consistently increased. Right? Now, we have had some dips, and I've got a graph which I'll try and cut in and put into on our YouTube channel. Hey, you're talking to the technician here.
Yeah.
The guy who's doing the YouTube videos as well. But I'm going to try and cut this in, and it talks about a stock market drop doesn't mean falling home prices. In our history, the one that most of us would remember would be in 08 and 09, where the stock market, got to put my glasses on, was down 35%. Yeah. Housing values went down about 15%. Mm-hmm. In August of 87 to November of 87, housing prices dropped about 2%. Stock market dropped 25%. Mm-hmm. So that time period, I can remember I had made my first investment in 1987. Okay. 1987. I had just, you know, I had $1,000 and I put it in the stock market. Oh, no. And that October day, all of a sudden, that $1,000 was worth not a whole heck of a lot. Yeah. Right? Now, ultimately, it came back. Just like housing prices ultimately came back. Yep. But the point is that stocks are much more prone to large value swings than housing. Yeah. So for many people, whether it's a second home as an investment property, meaning you're putting an asset that you're going to enjoy, use in that second home, versus putting it into the stock market and risking. Now, can you make more gains in the stock market? Absolutely.
Sure.
And with those gains comes more volatility, right? More volatility. The upside risk,
right.
The downside risk is all there. The upside potential, the downside potential is there as well. Where with housing in general, prices increase over time. So is the stock market volatility impacting today's real estate market? I would say yes. Okay. Do I have statistical data to show that? Only can show that real estate is slowing. When I say slowing, the number of units that are moving is slowed down. Now it's up from last year, but it's still not up where it really should be this time of year as we get into the spring. Inventory is increasing. Where we haven't had much inventory at all, it would come on and go off, come on and go off. So we're starting to see those inventory numbers creep up.
Okay.
And in fact, I would say more than creep up, they're jumping up.
Which is good for buyers.
It's good for buyers. It's absolutely good for buyers. And prices are beginning to settle down. We're seeing that curve start, the price appreciation curve start to slow down, meaning it's going more towards a balanced market.
Okay.
So it's ultimately better for buyers.
Yeah.
And sellers, if you are thinking of selling, there are still folks out there looking. So despite the volatility in the stock market, despite interest rates still being at 7%, the long-term value in home ownership is still there. So, and the charts will prove that out. And after the break, we can talk about a little bit more on this topic. We can talk a little bit about, ways to purchase. You don't have to have 20% down to buy a house.
Oh, that's a good relief. All right. Yeah. You're listening to Real Estate in Real Time. We'll be right back. Welcome back. You're listening to Real Estate in Real Time. I'm Woody Zimmerman here with Mark Skabowski of Remax Lakes, and just talking about the market right now, about the stock market is affecting the housing market. But like you said, inventory is up, which is good for buyers. Still, prices are still up. I mean, so it's good for sellers as well. So it's still a good time to buy or sell real estate right now.
And absolutely. And really, though, the whole point is just because the stock market has dropped doesn't mean that home prices have dropped.
Yeah.
And if you're thinking of your house as an investment, whether it's a second home, whether it's your primary residence, where would you rather have assets placed? Where would you rather have an investment?
Real estate has always been a very good, solid investment.
Yeah, you're not going to fly high.
No.
It's not Bitcoin where you bought it at 20,000 and it's now, or you bought it at 1,000 because you were one of those first movers and got in and it's now 100,000. But you also see the volatility in Bitcoin, right? I mean, it's up, it's down, it's up, it's down.
Yeah.
Housing in general is that long, slow curve.
Yeah.
Conservative investment versus more volatile investment.
Oh, yeah.
So less risk in real estate than there is in the stock market for the long term.
Yeah.
For the long term. Now, you could see variation month to month. Yes, you do. What is that based on? Interest rates. It's based on buyers coming into the market, time of year, all of those things. But long-term real estate is a good investment for you. The other thing that I guess we've talked about in the past, want to mention again today, is if you buy, you fixed the cost of housing for you. Rental rates have gone up significantly. They have pulled back some. But rents are still expensive.
Yeah, they are.
But if you're into a fixed rate mortgage, even if it's at 7%, which is where rates are today, it's not great, but where rates are today, you fix that cost. At least you can plan. You know what your monthly expenditure is going to be on housing.
Right.
It's not going to vary month to month or year to year as you change leases. Landlords could always raise your rent the next year. The only thing that's going to change if you're in a 30-year mortgage and a fixed rate is the potential for increase in insurance and the increase in taxes if you have those escrowed. Other than that, your housing cost is fixed.
Right.
So if it's fixed this year and it's going up 6% the next year, you're gaining each of those years as time goes on. So bottom line, real estate is a good long-term investment, whether it's a second home, whether it's your primary residence. A lot less volatile than the stock market. So for buyers, there's still this common misconception that you have to have 20% down in order to buy a house.
Yeah, a lot of people think that.
That is just not the case. That is just not the case. Now, is it the optimal case to have 20% down? Yes, if you don't want to pay PMI, mortgage insurance.
Right.
So cash is obviously number one. A conventional mortgage is number two with 20% down.
Yep.
But, saving 20% down for a lot of people is a big deal. My first house, we put 10% down, thought we were all that, and still had to pay PMI. Now granted, that's a long time ago. Housing values were a lot less, but, wages were a lot less. All of those things come into play. But, most folks, it's daunting to say, well, I have to save 20% down. When my daughter lives in D.C., a starter home is $1 million in the city limits. So 20% of that, $200,000.
Yeah, it's more than my first house.
How can you save $200,000 to put down? Now, granted, you have to make pretty good money if you're going to buy $1 million house. Absolutely. And that savings will be easier for you than somebody who's, so if you're making $500,000 a year versus somebody who's making $100,000 a year.
Right.
But somebody who's making 100 is not going to buy $1 million house.
Yeah, right.
Right? I mean, they're going to buy a house that's in their price range. So whether it's you have to put $200,000 down or you got to put $20,000 down, it's still daunting to you. My point is there are programs out there to help. If you are a first-time home buyer, the state of Indiana, it has programs that are out there and available. And I'm not going to pretend to be an expert on each of them because they've all got different nuances and things like that. But my advice would be talk to a local lender and say, hey, I'm a first-time home buyer. What do I need to do to get in to buy a house? And do that before you start going out and looking at homes.
Right.
But just because I pay X in rent doesn't mean I can afford that in a monthly house payment. So before you go look, talk to a lender. Don't be, afraid to at least have the discussion with the lender because you don't have 20% in the bank or you don't have a plan to get 20% in the bank.
I mean, like my first home, I think I put 3.5% down, something like that. I mean, it was really low and it was affordable, but because it was a program.
Yeah. Well, and I pulled some graphs and I don't want to spend all time talking about it, but one of them, the median down payment for first-time buyers is less than 20%. So most people that buy do put less than 20% down. They're first-time home buyers.
Right.
For most first-time home buyers that qualify for down payment assistance, 80% of the people are out there, only 13% actually use it. So there are programs that are available, you just need to ask.
Yeah.
Instead of being rigid and, I need 20% down or this is the only way that I can buy a house, it gives you an option.
All right. If you'd like to continue this conversation with Mark, make sure you reach out. Your contact info?
Sure. Website, skabowskiteam.com. Phone numbers, 574-527-0660. Can always email me, mark@skabowskiteam.com.
All right. Very good. And look for our mugs on TV as well. You've been listening to Real Estate in Real Time. Have yourself a wonderful weekend.